So guys, we're going to talk about Elliot Wave. It's one of my favorite topics in the world, okay? Now, you guys have seen me talk about it a lot. I'm an avid Elliot Wave trader, okay? So what is Elliot Wave? So Elliot Wave is a way to catalog price patterns and explain it in a way where it makes sense, where these wave structures, they recur in market price data, right? And you can actually isolate these movements with highs and lows, but it's much easier to explain what it is by showing you guys first, okay? So an Elliott wave structure looks something like this. I'm gonna go to 1 minute chart here so I can move the cursor freely very well. So what we can all say about Elliott wave is that there are 5 motive waves up. And we're going to use many examples to illustrate it and to talk about how it can be used in practice. So there are 5 waves going. Actually, I'm going to draw it much more expanded. There are 5 major waves going up on different degrees, like that, say. Right? This is a good idea of it. And then after 5 major waves like that, we get some sort of correction that can come in many different forms. And our job as an Elliott wave trader is to identify which one is 1, 2, 3, 4, and 5. And once we establish which ones are part of which wave structure, it allows us to get a gauge of where it could possibly land. So Elliott waves, they ebb and they flow across all time frames. Whether you're on a low time frame or a daily time frame or a weekly time frame, you'll be able to see these structures zooming in and out of all time frames. So notice how there are 5 waves here. Hang on, I gotta sneeze really quickly. Sorry about that. So for every wave going up, you will also find possibly 5 waves inside of these ones as well. So you'll find 5 waves inside of here as well. You'll find 5 waves going up in here as well. Elliott wave is a beautiful thing. Now within waves going up as well, you can even find more waves within waves. Like, excuse the slope there. So you can find maybe 5 subwaves within a subwave as well. So what we say is that waves 1, 3, and 5 are motive waves up. And that's really important to distinguish. So waves 1, 3, and 5, they're motive waves up, and then waves 2 and 4, they're corrective patterns that, we'll just call it very simply for the notation. We'll call this A, B, and C. And this is also an A, a B, and a C. Just like how this one over right here is an A, B, C as well. Now, this is just giving you a very broad idea of how Elliott waves can look. Excuse the slope there. So on an A coming down, we get typically 5, and there are different variations, so I'm keeping it to the most simple way. So from A to B, it would go A, B, C like that. And C is a beautiful thing because C always comes in a 5 wave zigzag down. And once we can identify these 5 waves coming down, we can easily play it by using Fibonacci extensions and retracements. So just as an example, when I do Elliott waves from the whole structure, I would ideally like to buy something between the 618 and the 0.5 level there. So now that we have a little bit of this out of the way, notice how this was wave 1, and that was 2, and this is 3, and that's 4, and that's 5. Well, all of this right here actually makes one trend line or one wave as well. So we have a wave there, right? And then we have a wave there as well, right? So this actually now becomes like this. So now this actually makes waves 1 right here of the primary cycle, and this makes 2 right there. And then we'll be looking for some sort of third wave up as well, right? And then it just ends up looking the same, right? It just ends up looking the exact same. So let's say I drew 5 waves going up there as well. The third wave is often the longest and never the shortest, okay? So I'm going to draw, just for example, 5 waves in here as well, okay? Like that. And then we get another wave correction, just like the wave 2 coming down there. So now we get some sort of correction like that. We'll just say it. And now this is ABC. And then we also get another wave up to make 5 again. And this is an important part of the cycle that we must differentiate. So just like over here, right? When we were in a very low time frame over here, after it made 1, 2, 3, 4, and 5 waves up, this point right here was called 1, and that was 2. And then it makes a 3 up here. 3. That's also 4 again. And now that's 5 again. And I'm not going to bother to annotate it properly. That'll be in a different, it won't be in the introduction one, because the labeling can be very arbitrary sometimes. I don't really bother trying to label it properly. It doesn't really matter too much to me right now. So after we do 1, 2, 3, 4, 5, guess what all of this is called, guys? Right? So this is part of a bigger cycle in the market. And if I wanted to draw it properly and I wanted to label it, I'll call it the grand primary cycle here, just as an example. So there are many, many different names to call it, right? Actually, like the biggest one is called the grand super cycle. Grand super cycle. So for example, if this was the grand super cycle that was compiled from many different waves, maybe this small one right here could be called like the primary trend. And I memorized it already. Like it goes from grand supercycle to supercycle to primary to intermediate to minor to minute to minuet to minuet and then to subminuet degrees. So these degrees are denoted by specific annotation as well. And once again, what we need to remember from this right here is that waves 1, 3, and 5 are impulse motive waves up with the trend, and then waves 2 and 4 are always against the trend. And then after we make one huge grand supercycle, guess what? We take a retracement of the whole thing. Bitcoin is very far from it right now. We are so far away from completing an entire grand supercycle that this is why there's still major scenarios of hitting well over 25K based on extrapolation. Like right now, we're basically on waves 1 and 2, right? That's all that we've done. We haven't even started a massive wave 3 grand supercycle yet for Bitcoin. So Bitcoin will have another massive tear. So these just keep going and they keep going, guys, and they keep going, right? Let's say this wasn't the grand supercycle, and this was actually, like, for example, just a supercycle. We'll just call that with primary or whatever, right? And then there will be another wave coming down here like that, and then another going up, right? And then this makes one wave of an even larger trend with another correction coming down. And then after this is done, it makes another massive wave. So in the grand scheme of things, if this was a daily chart, for example, right, we would also be able to find small, tiny little fractals and subwaves within each wave as well. So that's how we think of Elliot wave. Within impulse waves, the odd numbers waves are typically, or they are the correction waves, all right? So waves 1, 3, and 5, they're part of the grand super cycle. Sorry, they're part of the motive impulse wave up, and then 2 and 4, they're the correction waves, and it has a lot to do with Fibonacci. So it's really important to understand Fibonacci on a detailed level. You'll almost have to master Fibonacci if you want to use Elliot wave properly. And there's many different different annotations for Elliot wave as well, right? There's a lot of definitions as well. There's a lot of books that you can be reading as well. So I'm just gonna give you guys like a basic idea of what. And like we're gonna go from scratch pretty much and assume you guys know nothing. So right here, excuse me there, this is wave 1, all right, that we call it. This is wave 1 again. This is wave 2 that goes against the trend. This is wave 3 that goes with the trend. Wave 4, it goes against the trend. And wave 5 goes with the trend. So that's how we say, I must have said it wrong there a few times because I was a little distracted. Waves 1, 3, 5 with the trend, 2 and 4 against the trend. Now, what I'd like to make note of, I'm going to introduce some very basic rules over time. And one of the most basic rules is that wave 4 does not enter into the territory of wave 1 here. And the reason it doesn't enter it is because wave 1 was previously a resistance. And once we beat it, once we broke that resistance, it now becomes a support. Excuse me for 1 second, I got to sneeze. I'm not sure why I'm wearing headphones right now. And I'm wearing like a toque inside of my house, which is kind of weird. So I'm just having a sip of some nice tea here. So once again, wave 4 does not like to retrace into the territory of wave 1. And what we want to do is we want to make sure that it does not retrace. I allow a wick. I allow a wick on a 4-hour or 1 hour or 1 day chart because the rule more so holds true in a non-leveraged market. And in non-leveraged markets, that'd be great if there's a retrace into it. But because we can leverage to the extreme here, unfortunately, we will have to accept the wick. So I'm going to explain something about Fibonacci as well. And this is a very important concept to understand. Fibonacci in relation to Elliot wave. So all Elliot wave traders are very good at Fibonacci. They know it inside out. I'd say I've almost learned everything I need to know about Fibonacci already in terms of how to use it. I'm sure there's a lot of tricks here and there that everybody can pick up over time. But in terms of mastering, I feel like I'm there already. So, but of course, once again, there's always something to learn, but all Elliot wave traders, they have to have a very good grasp on Fibonacci retracement and extensions. If you do not have a good understanding of it, Elliot wave is completely useless. And also, Elliot wave is a very advanced theory. It is not something that you want to jump into before you learn everything like candles. If you pick up any Elliot wave book, and they're long, okay? They have some of the longest topics. I've read a lot now. My bookshelf is getting huge for stock market books and finance in general, which is business as well. And Elliot Wave, like each book is about 300-400 pages. And we're not talking about 300 pages with pictures. We're talking about with words, with theory, lots and lots of theory, as if you were in actual college or university. Think of it like a textbook. So just to give you guys like a basic idea as well about Fibonacci retracement, what we need to understand is that Fibonacci of wave 2 is only taken for wave 1 right there. Fibonacci for wave 4 is only taken for wave 3. And Fibonacci for wave 5, you will never, ever, ever take it for only wave 5's lengths. What you do is you take Fibonacci for all of this right here. And you guys know how I feel about Fibonacci, Fibonacci, Fibonacci. You guys know how I feel about Fibonacci, okay? It's super, super awesome, but you need to have a great idea of how it works before you can really get into this right here. So let's talk about the motive waves up, okay? The motive waves divide into 5 waves with certain characteristics, and they always move in the direction as the trend of the larger degree. So it's very straightforward and easy to recognize. And within these motive waves, once again, wave 2, okay, this is really, really clear. This is a rule as well for how we test for a breakout and to see if an Elliott wave does not fail. So I'm going to be going over Elliott waves in very high detail with you guys. I'm going to cover basically an entire textbook with you guys, okay? I'm going to cover 300 pages of textbook that I've already dissected and made a very condensed version of, and I will be introducing it over the months in several videos. And this Elliott wave introduction video is very basic. We are going to get into the most complicated things in here, okay guys? We're going to get into flats. We're going to get into like applied ratio analysis as well. What else? What other topics can we get into? We can get multiple wave relationships. We'll get into that. We'll get into expanding types of flats, contracting ones. We'll get into real-time applications. We will get into a lot of things, guys. It's a very advanced topic, and the things that I only talk about in my videos, they're very basic because I don't want to introduce a lot of things that might not make sense yet, right? So there you have it. So wave 2 does not retrace into wave 1 territory, or sorry, does not retrace more than 100% of where wave 1 began, okay? It can retrace 99.99999 repeating percent, but it can never retrace more than 100% for Elliot Wave to count, okay? If it does retrace by more than 100%, then that means that it's called a failure, right? It fails to make an impulse wave, and we further correct instead. Now, another thing I want to make note, again, is that wave 4 does not enter the territory of wave 1 by more than a wick, okay? That is really, really important as well. And another thing is that, hold on, I'm just grabbing some more notes here that I took. So another thing is wave 3 always travels beyond the wave, like most of the time, okay, I'll just say very clearly, it should travel well beyond the distance of wave 1, and wave 3 is often the strongest, but it is never the shortest, okay? So wave 3 can be shorter than wave 1, sure, it can be shorter than wave 1, but then wave 5 has to be the shortest, because wave 3 cannot be the longest, okay? So yeah, it can be like that, absolutely. So what other things should we be talking about as well, okay? There are so many things to talk. Okay, I don't think I'm going to jump into other advanced theories right now. I'm going to go over, for example, syndicator right now. It just happened to be up. So what we want to do is we want to always try to look for when the impulse wave reached the top. So what we try to do as an Elliott wave trader is we try to identify the peaks 1, 3, and 5. And they're very easy to identify after we get a bunch of signals, okay? And after we've identified the top, of course, it gives us a signal to sell perhaps, but more importantly, it gives us a signal of where we are in the market cycle right now, according to Elliott Wave, and where we could possibly buy again for re-entry. So what I like to do is for wave 1 in general, is of course I'll keep a very close eye on it, and the golden ratio of 618 there is a really good place to put a buy zone. And a great buy zone for wave 4's retracement, assuming we stay to the rule and hold true that wave 1 right there acts as a major support. So wave 4 right here does not retrace back to the territory of wave 1 by more than a wick. So we take the retracement of Fibonacci right here, and we try to time it so that it's slightly above the wave 1, just like that. So this acts as the support. That's how it is. And then after that, we take our Fibonacci. Hopefully it's around a reasonable ratio as well. And then after we have that, when we identify the 5th subwave up there, which makes one entire wave, we take Elliott Wave right here, and we try to find an ABC correction. Now we say a few things, okay? First of all, we know that an ABC is going to happen no matter what, and we ask ourselves, where is the most relevant support and resistance zones? Now, because wave 1 acted as a major support, where wave 4 did not go back to that territory, so wave 4 is actually now a support as well. So wave 1's top and wave 4's bottom actually act as a major support. So what we can assume right away is that this ABC correction, which can come in many different ways, will most likely retrace to the region of wave 1 and wave 4. This is very simple to deduce that because they were previously resistances that have now become a support, right? And this became a support there. This was a resistance, now became a support. So just to get over some of those basic things right there right now we're going to take a look at syndicator. So what we see here, first of all, is we try to count our Elliott waves. Where would the first peak be? We ask ourselves, okay? And are there 5 possible peaks that we can find? And we say, yeah, there's definitely 5 possible peaks right here, like that. So we take our extension tool, which I'm just using to test right now, and we make sure that wave 3 is not the shortest, okay? So what we do to test it is we take our Fibonacci extension tool right here, go from where wave 1 began to where wave 2 ends pretty much. And what we notice is that this one easily makes a target of 1-to-1. Now, I'd like to go over some other basics with Elliott Wave. So we count 5 waves going up like this. And as a general rule, for many things, is that once waves 1 and 2 are formed, it's actually really easy to project waves 3 and waves 5. And once wave 3 forms, we can easily project where wave 5 is. What a lot of people like to do is they don't really play this first wave coming up. So this first wave coming up, they will have missed it entirely, like I always do as well, and I'm okay with that. The reason why they miss it is because a lot of people wait for confirmation of an uptrend. What they like to do is they like to see how far wave 1 goes, and especially how far wave 2 retraces. If it retraces to a very respectable amount here, like say the 618 level, then a lot of people play wave 3. That's why wave 3 is often the strongest and the longest, right? It's often the longest and the strongest as well. And that's why we'll see wave 3 have much higher price action, or much more price action in general, than any other wave. Sometimes wave 5 can be really strong, where it'll get like an extended 5th wave, and those actually happen very clearly in very bullish markets. So a lot of people like to buy after wave 2 levels off. And the reason they do this is because of an easy extension target that can be reached. So what we do to target wave 3 is we use our extension ratio at 1-to-1. 1-to-1 minimum. I like to go a little bit higher than 1-to-1. Let me show you what I mean. So we take our Fibonacci retracement tool, or sorry, extension, like here, and I will target slightly higher than a 1-to-1 extension, because we target it using that rule of ours that wave 3 is often the strongest and it is never the shortest. So then now that I know wave 3 could possibly hit there, I create myself a support line where wave 1 is. And regardless of where it lands, I'll firmly believe to myself that it will retrace somewhere above there if we have created a third impulse wave. And now what we do for wave 5, regardless of where 4 retraces, like wave 4 is almost arbitrary to me. It's not arbitrary, but it's the most irrelevant one to me, because I just know it's going to retrace to roughly there. If it goes lower, then that's a failed impulse wave. Now, because I'm targeting slightly higher than a 1-to-1 extension for wave 3, what I do is I take a little bit of a higher target for 161.8 there for wave 5. Now, these are very general guidelines to follow, and you guys can adjust them to what suits your boat the most. But I just need to get that theory out of the way. So, let's just say, for example, right here, all right? Let's just say, for example, right here, we see, we didn't catch any of this, all right? We didn't catch any of this at all. We're like, shucks, wish we really caught it. Well, after it's to say right here, right, where you're seeing a downtrend already, right, you'll take out your Fibonacci tool, and you'll look for where it levels out. Obviously, this is a really good zone, but it doesn't reach it all the time. If it always reached 618 Fibonacci level, then everybody would be rich, right? Everybody would buy at exactly 618 Fib level, but it doesn't work like that. You have to be able to watch carefully where it starts to level out, and it's usually one of these Fibonacci regions. Here, clearly, it was a 382 level, right? 382 level. And another rule that I want to add in for you guys is this right here. These are incredibly important rules to remember, and I'm going to introduce, oh good gosh, like 1,000 rules to you guys for Elliot Wave. My head's just full of good information that can hopefully help you guys out down the road. So I haven't had my coffee yet. I apologize if my energy's not all up yet. It's only noon right now, and I actually got up around, I think, 9 a.m. today, which is kind of late for me, and I just started hammering at it right away. I got really hungry, and now it's time to get some coffee right after this at lunch. So let's say we have our 5 impulse waves going up like that. What we do is we take our Fibonacci retracement for wave 2. Let's say that we get a very bullish market. If we get a very bullish market, that means that a lot of profit eventually needs to be taken sometime soon. And if it's very bullish, then, well, what ends up happening is the demand is really, really high, right? But the supply is super low. So if the supply is really low, no one's really dumping it, and the demand's even higher, it makes wave 3 impulse incredibly strong. So if wave 2 retraces only a 382 level, what we will automatically assume is that the wave 4 will retrace more. So we will assume that the wave 4 could retrace more than 382 and up to wave 1 territory. So these general guidelines, like, they work like magic. I kid you guys not. Like, I've been trading like this for about 2 years now, and have been adjusting my strategies a lot, and it has just proven so successful. Like, yeah, I love Elliot Wave for a reason, right? So this one will retrace more than 382 and up to the resistance line here. But now let's just say, for example, that we have a different structure, okay? Let's just say wave 1 retraces to more than 618, right? Then what we'll do is we'll say to ourselves that if wave 2 retraces a lot, like let's say even 786 region, we'll say that and automatically assume that because the majority of the retracing happened here, wave 4 will not retrace as much as wave 1. So they're kind of opposite of each other, right? If one does 382, one will retrace a lot more. If one does more than 618, one will do a lot less. So that's how they work together right there. So let me give you a very clear example of how that works. Now, I haven't even charted this one yet. This one was just actually open. I was going to do a TA on it for people that have requested it. So here, guys, I see right away that this retraced 382, right? So first of all, let's practice counting the wave before I go further. And then I'll dive back into this subsection here. So that's now wave 3-ish around here, we'll say, okay? And that's 5, okay? So now that we have this 1, 2, 3, 4, and 5 counted, right? This is in retrospect. Yes, we can count it in hindsight. But let's say you were going up and you saw this retrace this much here to the 382 region. What you'll automatically assume is that the wave 4 will retrace probably more than 382. And surely enough, it really did. What we like to do is we try to buy at a reasonable level, buy the dip from the 0.5 or the 618 level, right? So this one did 382, so this one would do more than 382. Does that make sense? So you guys are taking your Fibonacci level right here, and you're looking to see where it's going to break out. That's what you're trying to do, okay? Now that you know it has leveled off around that 382 area, well, you say to yourself, how could I possibly target that? Remember, earlier we talked about, we take a 1-to-1 extension roughly for wave 1, and we take a little bit of a 1618 extension over there for wave 5. Now, it is up to you guys to use indicators on when to sell and when the top is. I'm just introducing very general guidelines, okay? So if you had bought right there because you noticed it was retracing only 382, then you would target a 1-to-1 after you're entering a position here. Even if you entered it on breakout, like around there, say, or especially on breakout, like over here, even if you wanted tons of confirmation, I probably would have entered well into there. You would easily just target a 1-to-1 extension, sell it there. And then for the wave 3 going up, you would do that Fibonacci like I mentioned, and then you would just target somewhere up there. It's up to you guys where you target, right? I'm just giving you a general rule again. Now that we have all of this made, okay, we have wave 5 completed already. What we do, remember, I was talking about how we only take Fibonacci for wave 1, and then we only take Fibonacci for wave 3, but for wave 5, we actually take Fibonacci for all of it, for all of wave 5s, okay, which makes one subwave. And guess where you guys want to buy it? Can you guys just take a wild guess? Just take a wild guess where you would want to put your stop buy, or your limit orders to buy. You probably want to buy right around the 0.5 to the 618 region. Yes, that is how reliable Elliot Wave is, and how reliable Fibonacci is as well, okay? So you take the whole correction up there, and then you'd want to buy at the 618, the 0.5 level, and of course keeping a close eye on it. Now, now that we know there were 5 waves in here, we can easily count that as 1, 2, around 3-ish there, 4, and 5. And in here, it made some sort of ABC correction, okay? I won't get into all of this major correction over here, like this, but this is some sort of ABC correction that has happened. And we will get into corrections another day, into major corrections and how they're counted. I just wanted to specifically focus on impulse waves up first. So if that was 5 waves going up there, then that would mean that this is the second wave. So what we do is we take Elliot wave from 1 to here, and we know that that was 3, 4, and 5 is up there. Now let's do the exact same thing. Remember earlier, I took a 1-to-1 extension here of wave 1, so I could project the second subwave. So here it had 5 subwaves going up, right? Well, this is 5 waves here as well. So 5 waves make one big wave of the larger trend. So here we use our Fibonacci extension, right, of the 1-to-1 ratio to get our targets. Well, guess what, guys? Here's waves 1 and 2 as well right here. So what we can do is we can take our Fib extensions from 1 to over here, and we do the exact same thing, guys. After you buy right there, you put yourself a stop sell right here, okay? And guess what? Remember wave 3? Okay, remember wave 3 right here? We took our Fibonacci, or sorry, retracement tool here. Yeah, Fib retracement, and we wanted to buy roughly in this level here. Now, if one retraces 6.618 or 0.5, say wave 2, we don't know what wave 4 is going to do. It could do the exact same thing. We're talking about the opposites of extremes Fibonacci retracements, like 382, 236, which would make the other one lower or higher, right, in retracement. So here, if you guys notice, we took 0.5, right? And we're targeting our wave 5 up there. That's where we bought it. Now, if you take a look at this, where we bought on here, and then we target a 1-to-1, right? And we still have a second target up here that we want to get into, but that would be buy on wave 3. So we take our wave 3 retracement right here, for example, wave 3 retracement, and we see that this one retraces, I can't see, I gotta delete this. It retraces between 382 and 0.5. Great. So you guys have to watch out for that. You can even buy it on strength if you want to. It's up to you, because the target 2 is already set there, right? It's already set from after waves 1 and 2 have already formed. So we take the 1-to-1 extension to target 3 when we buy here. We take our Fibonacci to see where it could bottom out. So we can buy here on the wave 4 dip. So then we can target wave 5 up there. And surely enough, it hits the exact targets. This was a 1-to-1 right here. This is a 1618 extension right here. Awesome. So now that we have all 5 waves going up, okay, what is going on next? What is going on next? We are going to take our Fibonacci for all of this right here, okay? For all of this right here. And what it looks like right now, since we've actually hit all of our targets already, is it's going to fall to one of these regions, guys. I'm sorry to say, but Syndicator is 100% going to fall to, who knows? Could be even down here. But realistically right now, all we can do is sit and wait to see what kind of rounding off this is going to give us. And I think that in a few days, we'll get a much better idea of what Syndicator is doing here. I'm just going to zoom out and see. And there are many different structures. We can't talk about individual impulse waves up yet, because each of these individual impulse waves up and corrective waves, they all have different characteristics, right? And they all have small different sub rules for each wave as well, because they could all be really different. And then when we talk about corrections, the ABC, there are so many different variations of that as well. Like I can't even count with like 50 fingers, I'm sure how many there are. There's so many, with 50 hands. So now that we reach 1, 2, 3, 4, and 5, I will expect a retracement for Syndicator here, for example, okay? So who knows, I'll be waiting for it, but I know that the 5 waves are now done, and I know for a fact that it's time for it to correct. So let's just do another example. Like let's do Bitcoin Cash, for example, okay? Because that was a really nice chart. I think it's definitely one of the nicest charts I've seen in a very long time, and I'm a big fan of Bitcoin Cash in terms of the chart, but not a fan of the coin itself. So just as an example, this one right here, okay? Where are the 3 peaks? Can you guys identify where the 3 high points are that would make waves 1, 3, and 5? I'll give you guys 10 seconds. Okay, guys, this would be wave 1 if you guys called it right here. Okay, this is a peak, obviously. Where's the next peak? That's definitely a peak as well, right? Where's the next peak? Right here as well. So because we know those are the 3 major peaks there, we can just count 1, 2, 3, 4, 5 as well. 1, 2, 3, 4, somewhere in this region there. You know, 4 is pretty much there. We'll say 5. But I'd rather make my 4 just somewhere right here where it's parallel and perpendicular. Or sorry, it's perpendicular to here, and right there, make it 90 degree. So, for example, if we took our Fibonacci retracement here, sometimes the rule doesn't hold true. It just depends on how bullish everything is, right? But Bitcoin Cash likes to retrace 786, if we notice. Now, I know I did say earlier that if this one retraces 786, then the other one should retrace a lot less, right? But you know what? Because sometimes you get massive spikes up here like this, that rule may not hold true. So it's up to us to interpret our guidelines that we set for ourselves. So what I would recommend doing is just, you know, you take your Fibonacci up here, and hey, this one actually wanted to retrace about 786 as well. Now, what we do is we use a general guideline, right? Like I mentioned, we use a general guideline that the wave 4 does not retrace into the wave 1 territory by more than a wick. Well, guess what, guys? If these are on the higher time frame, it's actually just a wick, right? So if I went down to right here, we see that only one tiny little wick. So this is absolutely 100% acceptable in leveraged markets. So I hope that makes sense right there. So this one here, you see it level off. I'm sure a lot of people probably just bought right around the 618 region. It's probably what I would have done as well and what I usually do. I'm not too concerned about it dropping a little bit lower if I believe in the impulse wave. So I'm sure a lot of people just bought right around that region between the 618 and the 786. Who knows? People even bought here, I'm sure. This was a massive buy zone. Regardless of where you got in there, you still made some immense profits of like 200-300%, right? So this one we trade 786 about, this one we trade 786. And what do we do, guys, at the end of all 5 waves? Do you remember? So what happens is we take Fibonacci for all of it, right? And I mentioned earlier that here, wave 1 acts as a really strong support, and so does wave 4. And I mentioned that the ABC correction that this one does, usually falls to a territory where there was very heavy price action before. So where do we see some massive support regions? We see it around there, right? Which also happens to be between 786 and the 618 level. And that's why I'm saying that Bitcoin Cash really likes these levels. We've seen it on the first impulse up, we've seen it on the third, we've seen it right here as well. Literally, on every single correction, we are seeing Bitcoin Cash go between 618 and 786. So it's really easy to play these kind of coins. And what I bet right now is a lot of people are probably amassing Bitcoin Cash soon. I did a long-term prediction on this one, and it's going to be a really big coin. So I just wanted to give you guys a very quick introduction to Elliot Wave, and this is something that we'll be covering much more down the road. And I also need everybody to understand that this is not a light topic, okay? This is not a topic where you watch a 1-hour video you have now mastered it, okay? This is a topic that probably that's equivalent to a 1-year university, class, for example. Okay? You'd have to take like 5 university classes to actually get a really good understanding of it because it's all theory, right? It's literally all theory, guys. I mean, if you look at the book, for example, okay, if you look at the book, this is the one I like to use for reference here. It's 118 pages, and this is just a condensed version, right? A super condensed version that I use for reference. The original version is like 300, 400, 500 pages, and we like to keep a lot of references because imagine I'm not saying we're even on the same level or close to them, right? But imagine any profession, like a doctor or a lawyer, where they need to have a lot of textbooks to refer to, right? Because it's hard to memorize everything. So that's what Elliot Wave books are really good for. Now, if you guys are looking to get some Elliot Wave books, I'm going to show you guys a few Elliot Wave books, which I will not be mentioning in any of my comments, because if I addressed every single person who asked the exact same question, I would not have time to do anything. So it's up to you guys to, keep up to the material if you want to learn and grow as a trader. So what I like to do is you can just Google it. Just Google Elliot Wave PDF. And there's a book right here that's a condensed version called the A.J. Frost, Robert Precher. That's a very, very good book. In fact, I probably recommend buying the original book as well. This is an old book, but I think it was released in 84, even earlier than that. No, 49, this one right here, 1977, that's when it was released. And this book, it still holds true, guys. It's still literally the absolute best book, okay? And the last book that I would recommend for now is The Visual Guide to Elliot Wave Trading by Jeffrey Kennedy here. It's a really good book. It's got tons and tons of pictures on it. It was recently published about 4 or 5 years ago there, and you can find tons of examples on there as well. So this concludes our lesson, I think 13 now, right, tutorial that covers an introduction to Elliot Wave there. I'll be releasing many more Elliot Wave tutorial videos with much, much more detailed explanations. I'll be covering pretty much every topic from all the textbooks over the course of, I don't know, maybe a year or something, right? These are very extensive topics that they need to be approached very delicately as well. So make sure that if you guys are I'm speaking really truthfully here. This will sound very blunt, okay, like I mentioned. A lot of people look at Elliot Wave, they're like, oh, 1, 2, 3, 4, 5. And then there's all these little rules that they're missing, and then they post it on Twitter or online, right? Like, especially my Twitter, like, oh, what do you think of this Elliot Wave? It's really hard for me to give feedback, and I won't really be giving feedback on anyone's Elliot Wave because it's up to you guys to learn it, right? And not only that, I don't want to give really bad feedback because most of the charts that I see using Elliot Wave, they're very, very wrong to the extreme level. But what I'm getting to is you cannot even start learning Elliot Wave until you know every single simple topic first for trading. It is not an easy topic to learn. It is something that you will get devastated by the market if you try to use it without getting a very basic understanding of all the other fundamentals first. So that concludes the video, guys.